Okay, so welcome everyone to day five. Today is going to be all about journaling and the process that I use to journal, what I look out for, and what I do on a day to day basis to actually review my trades. I think that journaling is one of the most important parts of trading. And just looking back on my personal career, one of the biggest turning points in my career early on was when I properly started to journal. A lot of people think that they are journaling when they just simply backtest, but that's just one part of it, right? Journaling is a very deep and personal process that requires a lot of time that you need to set aside where you're not distracted and you're just simply reflecting back on what you did, right? Your thoughts, your emotions, how you felt, and much more than that, right? So looking back, like I said, I would say probably the first year of my trading, I wasn't really journaling. I was just taking on trades and stuff like that. And then from there, I stumbled upon Umar Ashraf, if you guys know him. He's a very famous trader who created TradeZilla, the journaling software. And I automatically subscribed. And since that day, I've been using it every single day of my life. And trust me when I say this, there is a very, very strong correlation between weeks where I haven't journaled and my PNL and my performance being really bad, and weeks where I have journaled very systematically and did not miss any day of my journaling, and my performance definitely shined. So, no doubts there that there is a strong correlation between those two. But yeah, so I think today's session will probably be a bit shorter than usual because there isn't that much that should be covered about journaling. But I needed to make sure that this has its own session so that everyone takes it serious. Just like yesterday's session, I know the timings was a bit off. I apologize for that. But I do hope that you guys all go back and watch yesterday's session because it is one of the best streams that I've personally recorded and presented. And it really talks about a side of trading that not a lot of people think about. You know, everyone is more so obsessed with the technical analysis and the setups and placing the trades, but they don't actually focus on all the other aspects of trading that really have an impact on your performance, right? Like the routines, the reflections, the actual process that you take when you approach the markets, and everything like that, right? So everything that's aside from the charts. The charts are the fun part, right? But you also got to do some of the boring part, just like journaling, to actually excel at this game. So make sure not to skip out on the boring part. Watch yesterday's live stream and let me know if you guys have any questions. But yeah, so let's get into it. So today is going to be journaling like a professional. Oops. So first things first, why does journaling even matter in the first place, right? To put it simply, journaling helps you identify the mistakes that you've been doing. All right, trading is a very complex game. There's a lot of things that are going on at a very fast pace, right? With different markets moving and you placing different trades and taking different positions and your P&L swinging. And there's just a lot to take on mentally that you will feel overwhelmed pretty often, right? Feeling overwhelmed in trading is something that does happen pretty often to me, especially during weeks where I'm looking to get really aggressive and I see a lot of opportunity. I do feel overwhelmed, right? That feeling is not going to go away. But the one thing that you could do to help yourself is to journal, right? Sit at the end of the trading day, which is very important, right? You don't want to be that guy that's journaling while the market is open. You won't be able to focus. You want to make sure that it's after when the market has closed and you've kind of set some time aside. Maybe just 30 minutes of your day. I think that should be enough to journal one trading day. Maybe even longer. Kind of depending on what happened during that day, right? But really setting some time aside where you're just kind of focused. It's kind of a quiet time. You feel rested and you can actually think, right? Because a big part of journaling is the actual charts and back testing and looking at the actual numbers and the P&L. But another big factor of it, which I think is even bigger than just the charts, is the mental aspect, right? Like thinking about how you felt throughout the day, all the emotions that were settling in. Were you anxious at when you were placing the position? Did you feel overconfident? Were you worried when you were cutting your position? Did you hold on? Were you acting a bit more greedy when your position was in profit? There's a lot that goes through your mind whenever you are trading, right? So you want to really be focused whenever you're looking back at that and thinking backwards of what actually happened, right? And what you felt. So make sure that you set some time aside, right? So journaling is going to help you identify all those details that you might not see initially because you haven't actually sat and thought about it. But once everything is there in front of you and it's written down, you can start to see the mistakes that you've been doing, whether technically when actually taking the trade or whether it's more of a psychological factor, right? So journaling will help you prevent repeating the same mistakes because they will all be written out in front of you. Your memory is not the most reliable thing, right? I think having a good memory is one of the most important parts when it comes to trading. And one thing that I like to do with myself is kind of test myself on charts. I kind of talked about this yesterday or 2 days ago when I was explaining the Nvidia chart and how I remember every single candlestick from July, right? This is very, very important because the next time you see a chart that you like, you'll be able to identify it within seconds because you've seen something very similar play out before. I don't know what exercises you can do to actually train your memory, but me personally, I just like to kind of just test myself for fun, like cover a certain part of a chart that I've been looking at for quite some time and try to remember what it looked like. That's very important to have a good memory. But at the same time, your memory is not your best source of data, right? Your best source of data is the actual numbers and the actual statistics of your trading performance. And if you aren't subscribed to TradeZella or to some sort of journaling a program, it's going to be hard for you to actually look at all the numbers, especially in kind of a statistical way that's easy to read. You can obviously download your broker statement or your transaction statement. All brokers have that, but those are not the easiest to read, and it's more so just looks like an Excel sheet with a bunch of numbers. But yeah, so always keep in mind that you want to have the numbers in front of you and you want to have them in a spot that's easy to read, which is why I think TradeZilla is the best because it shows you all your actual performance and all the actual metrics behind your trades, right? So not just the P&L, but all your entries, all your trims, what you stopped out at, the commissions as well, and a lot more. So just keep that in mind, right? And then next up, right, of course, just like in anything else in life, improvement will come from review and reflection. And pointing back to one of the points that I made yesterday about trading being a sport, think of journaling just as an athlete watching back their film, right? Or watching back the game that they just played. Whenever you, I don't know if you guys have all played sports, but I played sports. I played basketball. Um, I still do, but I was part of the school team a few years ago. And I would always remember some of the mistakes that I would do when I'm on the court, right? But it's hard for me to actually remember every single thing that happened because there's a lot of things that I don't even notice myself, right? Um, but when you watch back the film, you get to notice some mistakes that you weren't noticing initially, right? Because you're so focused on the game. It's the same thing when it comes to trading. Whenever you are actually placing trades and you actually are trading, it's hard for you to remember everything that is happening, and it's hard for you to identify all the mistakes that you are making. So what you need to do is you need to actually watch back the film, or in this case, when trading, you need to go back through your actual all your executions and noting down everything that went on. right? So after doing that, you get to actually pick what's working, what's not working, and then you get to improve from there. And just to touch on the reflection part, you guys all know that trading is not just numbers, right? It's not just charts and numbers and setups. No, it goes a lot more deep than that. It's a game. It's a very, very tough mental game where if you have even the slightest, um, I don't want to say personality, but if you even have just the slightest kind of emotional struggle, you're gonna struggle big time, right? If someone has a big ego, they're not gonna succeed. If someone has a lower self-esteem, they're not gonna succeed. If someone has anger issues, they're not gonna succeed. If someone I can't name anyone off the top of my head, but you guys get the point I'm trying to make, right? It's a game that's very based on psychology, right? And you can't identify what's going on mentally without actually sitting down and reflecting. So reflection is very, very important. I know it is boring to do. I dread journaling every single day. When it comes to trading, it's the most boring part of my day. But I still have to sit down and do it because I know over time I will see the effects. So the template that I personally use is a very kind of systematic template, I want to say. So every trade is logged the same way, right? Now it starts off with TradeZilla where I actually get to see what's going on and what actually happened, right? It has a very strict structure, right? So that all my trades are journaled with some sort of consistency. Obviously, my answers will differ from trade to trade, but generally speaking, the questions that I ask myself are the same, and they're very simple. I'm gonna get into them. I've already posted them, but I'm gonna get into them in a bit. So, and I also don't make any exceptions, right? So, all the trades are journal, no matter if it's a lotto trade or if it's a trade that is of large size, if it's a loss, if it's a win, it doesn't matter. They're all getting journaled, right? So keep that in mind. You do not want to skip out on anything. So the first part that I'm taking note of is the contract that I took and the P&L. So I'm just writing down the ticker name, the contract, right? Very basic stuff. The P&L initially, right? What the outcome of the trade was, both percent and dollar wise, and then the position size that I took, and then the result in terms of R, which is risk to reward, right? So if I risked 10% and if my stop was placed at 10% and I got my trims off at 30%, then that's a 3R, right? So I take note of that and I write that down. You could do both two different R's, one for the underlying and one for the options, because you will notice that there is a difference between them. So if you want to do both, do both. I suggest honestly doing both. It'll take more time, but it's worth it because there's gonna be a difference between the actual option and what happens on the actual underlying. Uh, I just saw the live chat. Yeah, I do hoop. Not as often now, but in high school, yeah, I was hooping a lot. I was also captain of one of my high school teams twice, I think, in 2 years. But yeah, so next up is the setup. So now we're still talking about the actual technicals and the actual charts, right? So just describe the setup. What happened, right? Why did this trade exist in the first place, right? So just describe in a sentence or two what were you looking at, right? So let's just say I was looking to trade this retest of the declining moving averages on a distribution chart with an RDR entry with the volume pattern suggesting more downside to come, as the volume poured in off the highs and then began to decrease over the past few days. And I was expecting volatility to pick up in the coming days, with the market conditions being X, right? So explain the setup, but also talk about the market context, right? So what did the overall market do? Is the market currently in a trend? Are we in a range? Is there any sort of event, right? Are we coming off of is there earnings, CPI, FOMC, anything like that, right? Did we just have any headlines from Trump? If you guys were trading last year before Trump took office, there is definitely a slight change. I'm sure you guys have noticed it just from the headlines. Before Trump took office, there wasn't as many headlines as now. I wasn't trading in the initial Trump presidential term. I forgot how many years ago it was now. But yeah, so I wasn't used to the president dropping headlines every however long and it adding volatility to the markets. But you gotta adapt to that. So take note of that if anything like that happened. And then you also want to grade the setup quality, right? Now we're talking about the setup, not the actual trade, right? Because keep in mind, those are two separate things. What you see before placing the trade and why you place the trade is different to how the trade played out and how you executed on the trade, right? So separate those two. Don't put them in the same sentence or in the same kind of thought. The setup is what you were looking to trade, right? And then what you actually traded is the result of what happened and there is and how you executed, right? So separate those two; they're not the same. Here, as of now, we're talking about the setup quality, right? So something could be an A plus setup, for example, but the trade result could be a C plus because, for example, you didn't execute as good as you wanted to. And as always, no setup, no trade. Just wanted to put that out there just as a reminder. And one more thing, guys. Whenever you're journaling, right, and you're forced to describe what you saw, and you make a promise to yourself that you're going to be very disciplined with the actual journaling and you're never going to miss out on journaling a trade, trust me when I say this, it's going to get you to stop taking trades that have no setups. Because it's easy for you to pull the trigger on something that looks kind of attractive but has no setup when there is no accountability factor, right? In trading, essentially every man's for himself, right? No one is out there with a mentor that's watching over them 24/7. You don't have to report to your boss. There is no teacher, right? There is no business partner. No, it's just you. So it's easy for you to kind of throw things under the table and just trade something that kind of looks a bit attractive because you want to feel something and you're bored. No one's going to come and stop you from doing that or tell you, hey, what are you doing? This is bad. This is wrong, right? There is none of that in trading. But what you can do is you be that guy, right? As in you coach yourself and you stop yourself from taking those trades. You might be thinking, well, what do you mean? Well, when you're forced to journal after taking every single trade and you sit there and you start and and let's just say you took a trade, right, with no actual setup, right? It's just some BS that you saw on the screen and you were bored. When you sit there and you're forced to write, I saw nothing. I lost on this trade because I was bored and I wanted to gamble and I wanted to feel something by watching my P&L move. You're gonna feel shameful, right? You're gonna feel like a loser when you actually sit and type that out. Even more than the actual P&L. The P&L is gonna make you feel bad maybe for a few minutes, but when you actually sit there and write that out because you're forced to journal and you're forced to reflect, you're gonna feel very shameful and you're gonna feel like a loser and you're not gonna want to do it again. Right? So it's kind of an accountability factor that you're essentially building for yourself, right? So here we're talking about the setup. You want to grade it, and obviously the setup grade is not something that is necessarily strict, right? I might see some certain setups that are an A plus in my book, and your book it might be a C. That's totally fine, right? We can have different opinions and different approaches to trading, but the important part is you actually identify what each setup quality is, right? Starting from the highest, which is an S tier setup, and then you go to A, B, C, D, and if you want to maybe put an A plus, A minus, as you wish. But make sure that you actually do identify these. And if you don't have these set up for yourself, don't worry. I'll be showing you guys what my setups look like and what qualifies as an A plus and an S tier, a B and a C. But that's in one of the later weeks. Next up, we have the entry. So here you're writing essentially why you entered, right? So, for example, I found the entry on the 10-minute time frame as price swept the previous day's low and reclaimed with a slight increase in intraday volume, and the candle closed with a reclaim of low of day and a hammer-looking bar. Plain and simple, right? Should be short, about a sentence, 2 sentences, or depends on how detailed your entry was. And then you just want to also write out the level or the trigger. So if there's a specific level, let's say break of 100, or what the trigger was, right? So a reclaim of the previous day's low, for example. All right. This will start to get you to think as well about your entries and whether they are planned or they're reactive and rushed. So whenever you're doing that, you start to realize the difference in your P&L and just your overall performance whenever you have an entry that is planned. So if you guys remember yesterday when I talked about the process that I take before the market opens and I write down exactly what I'm looking for to execute on said trade, I will write that down, right? So that it's a planned entry. So then when I come to journal after, I'll get to write down the plan was to enter off of the RDR. The RDR played out intraday and I bought. Or for example, the plan was to enter off of an RDR, but instead intraday we got something different and we got a higher low setup off of a strong orb, for example. All right, so you want to write everything down and making sure that your entries are not rushed and you kind of reacting to price very quickly, but instead they're planned and they have thought behind them and they make sense. Next up, we have the stop and the risk. So basically the invalidation of the stock or of the trade. And just like we talked about yesterday, the stop is always identified before taking the trade, right? Now, it might be a bit difficult for you to identify the exact level to the dot that where your setup is going to invalidate, because obviously we know that stocks don't move to the penny, right? They don't move to the exact level that we want them to move, and they don't move in straight lines. But instead, you can kind of have a general idea. Like for example, I'm looking to cut my invalidation for this trade is gonna be a break and follow through of the previous day's low. Right now, when it comes to the actual trade, the actual defined stop would be, let's just say, the 98 level. Right? Before the market opened, you thought it would be, let's just say, the 100. But as the market moved, you can kind of shift that around, just so that you make sure that you're also giving yourself breathing room. You don't want to be that guy that is cutting their trades after it goes against them for 2% or 3% when talking about options. You want to give yourself enough room for stuff to actually work. So you want to define all that before actually taking the entry. And you also want to talk about your risk to reward. As always, I'll just say my risk here was 10%, but I was targeting a 30% win. And then you also want to talk about whether your stop was actually respected or if you violated it. And this goes back to what I was talking about earlier about the setups and the entries. Whenever you are taking a trade and you know in the back of your head that you're gonna come back to this at the end of the day and journal it, it's definitely gonna make you feel like you don't want to violate your stop, right? Because you know that there is someone, which is you, that's gonna check in and shame you essentially if you violate your stop, right? So you're always gonna want to respect it and cut your trade when it's time to cut it. Next up, we have the exit, right, which is different than the stop. The stop is where the invalidation of the trade was. It could have been a loss or a win. If it's a win, then obviously you don't stop out. Instead, you took an exit. And the exit is just essentially your take profit, right? So where you're planning on taking profit versus what actually happened, right? So just say you were planning to take profit at 30%, but you ended up actually taking profit at 15%, let's just say. So you write all that down. And then you also want to write down your trims, right? So if you're trimming a third at a time, if you trimmed a fourth, if you took full size off the table, right? You want to write all of these down. And then you also want to write um, why you decided to exit, right? So was the exit based on the rules that you had, right? And the take profits that you had? Or was it because you were starting to feel fearful and you took a winning trade off too early, right? Or whether you failed to do that. And if you failed to take profit at your take profit level, you want to write all of that stuff down. The last part of the more technical aspect of the journaling is just an overall trade assessment, right? So after talking about the setup quality, right, in the first slide that I showed you guys, or the second slide, now we're talking about the overall trade. So what actually happened, more so independent of P&L, right? Because we know that um, good trades can be losers and bad trades can be winners, right? We don't want to focus on the P&L. We want to focus more so on how our performance actually was. And your performance is obviously based off a lot of things, with the main aspect of your performance being how disciplined you were to your system. So you want to write all about that and just overall what, how everything played out. And then you also want to ask yourself this question is, would you take the same setup and same trade over 1,000 times, not knowing the outcome, right? Because as always, we don't know any outcome of any trade that we're any trade that we're taking, right? But we do know how good our system is. We do know how good we've stuck to our system throughout the trade, and we also do know the quality. Sorry, guys. We also know the quality of the setup, right? Those are things that we do know and we are sure of, right? So you want to ask yourself that question. If this is a trade that you're not willing to take 1,000 times, right, and a trade that you're willing to essentially take over a lifetime, then don't take it, right? But if it is something that you are willing to take, not knowing the outcome, then that is obviously a good trade, right? So it's just something for you to think about and to always think about longevity, right? I've seen a lot of traders come into this game, kill one bull market, make a ton of money on the moves up, and then as the market begins to chop, they blow everything that they made in the actual bull market, and um, they're back at where they were, or even worse, by losing a lot more than just what they made, right? So those are usually traders that are more so focused on just the outcome, right? And not so much so the actual performance. And the overall trade assessment and thinking about the next 1,000 trades, right? Because keep in mind, we are not in this game for a month or 2 months or 3 months. No, we are in this game. I think most of us at least are in this game for a lifetime of trades, right? So we have 1,000, maybe even 10,000 more trades ahead of us. Me personally, I've taken 2,100 in trades um, by now, which is quite a lot, and I'm sure that number is only gonna increase, hopefully at a slower rate than what it has been. But there's always gonna be a lot more trades in the future, right? So always think about the longevity of this game. We are here to build long-term consistency. We are not here to just take a winning trade this week and leave the market, right? So think about longevity and the next 1,000 trades that are gonna come. So now, after talking about the technical perspective and the charts and the numbers, now we're thinking about the actual reflection, right? So now we're putting behind us all the charts and all the actual numbers and the performance based metrics. And now we're thinking about us, right? We're thinking about ourselves, we're thinking about our mindset and our emotions and how we felt during the trade, before taking the trade, and after the trade. So this is usually where most of the growth actually happens because, like I said, technical analysis and just being a market analyst, it's easy, right? Being a good market analyst isn't difficult. It's something that a lot of you can learn in a few months at the maximum, right? Like in a few months, you could know probably 95% of the things that I know and I've studied over 4 years just by talking about the analysis part. The hard part comes when talking about the psychology and the execution and the position sizing and the risk management, all that. With the big part being the actual psychology behind trading, right? Because in trading, there's a lot of things that happen that would not happen in any other game or sport that you've played, right? And just as an example of it, in most sports or in most games or most business even, you always want to be pushing. You always want to have your foot on the gas, right? You always want to be working super super hard, day in and day out. In trading, there are days where you are supposed to get off the screens and do nothing at all, and that is considered working hard. That's just one example of a pretty big difference in trading in this game that we're playing essentially, compared to others that we need to wrap our heads around, right? And there's a lot more than just that. That's just one example off the top of my head. So in this part of the actual journaling, we want to be focused on reflecting about how you felt, right, and the more personal aspect of what's actually going on. So it's divided into three parts. The first part is, what did I do great? Very simply, what did I do great in this trade? Did I execute good? Did I stick to my discipline? Right? Did I follow my rules? Did I follow my system? Did I take a very high probability, great quality setup? Did I pay attention to the market conditions? Did I block out the noise? Anything good that you think you did in that trade, write it down, right? Just simply write it. In this trade, I made sure to pay attention to my execution and I executed great as per my plan before the trade started. I stuck to my system, which had a focus of making sure that X, Y, and Z on this trade. Right? You want to write all of these down. This is gonna start to help you think about what are the positive things that have actually had a positive impact on your performance, right? And keep in mind, your performance is not a reflection of your P&L. Those are two different things. We are focused on improving our performance, and our P&L will catch up to that over the next 1,000 trades. Right, so just keep in mind that I'm always talking about performance and not the P&L. So whenever you realize those great habits or great actions that you took, you want to be writing them down. Next up is mistakes that you made. This is probably the most important slide out of all the ones that I just showed, because this is when you start to realize what's going on, what's happening that's wrong, right? So you want to be asking yourself, did I break any rules? Was I being emotional? Was my timing off? Did I rush into this trade? Did I oversize? Was I not aggressive when I needed to be? Right, which is also another thing you need to think about. When a fat pitch is there and there's an S to your chart, are you making sure that you're smacking it with full size, or not necessarily full size, but you're being aggressive um, as to what you identify as aggressive, which is different from person to person. So you want to be asking yourself all about that. And one quote that I like to live by in trading and just in life as well is, in the game of trading, you are allowed to make every single mistake once. Once you make that mistake, promise yourself you'll never make it again. Every single mistake that you guys have probably done, I've done probably 10 times the amount, right? I've done all the mistakes that you can think about, and I still struggle to this day. There's obviously still mistakes that I do, but the goal is that whenever you do make a mistake, just promise yourself not to repeat it twice. If you can do that, right, and you make every mistake that there is, you're eventually going to be successful, right? Because you're going to end up not making any mistakes after making every single one once, right? So always think about that. Today I broke my rules. That's it. This was my only chance to break my rules, and I get a pass. I'm never allowed to break my rules again. Write that down, literally word for word. Today I executed off the open without waiting for the first 5 minutes of the market open, and my stock wasn't even at my level. You get that one free pass, but never again. Right? So try to live by that. I think it's a great quote that I was thinking about from quite some time. For those that were in the boot camp that I did for TOC back in April, I think I said that quote on there, and I think it stuck with a lot of people. And I think it's just something great to live by, right? So promise yourself not to repeat the same mistake twice, and you'll be on your way to success. So you have a pass to make every single mistake once, but never again, right? So make sure you're writing all those mistakes down. Let's just say, for example, I got a bit too aggressive when I needed to size down. I did not pay attention to what was happening in the broader market. Write that down, right? All the mistakes that you made during the trade. Next is your reinforcements into tomorrow. This is when you combine what you did great and what mistakes you did into one, right? So whatever it is that you want to adjust, if there's something that you did good that you want to keep doing, right? So if there's a behavior that you want to enforce or repeat into tomorrow, notice how I said tomorrow, right? Not necessarily the next couple of weeks, no, but specifically tomorrow, right? So that you're becoming consistent with things from day to day. Are there any adjustments, right? Just like, for example, make sure not to make the same mistake of executing a bit too early into the market open, or for example, make sure to cut your loss when the stop is a hit, right? Even those little basic things which you might think you are too advanced for, no one is, right? Even the great traders, they all go through the same processes, right? We're humans, we're gonna end up making mistakes, but the goal is to not repeat them and to write them down, right? And to remind yourself for the next day, right? So this part is all about reinforcements and what things you want to be doing into tomorrow. So key takeaway is your decision making in trading will be trained and will improve a lot from journaling, because like I said, you will start to see a lot of patterns in your psychology and the way that you think, right? And how your mind goes about this mental journey, right? So, how, for example, if you notice the days that you've gone on tilt, right, which I'm sure all of us have gone on tilt multiple times in our careers by now, um, you notice that your mind kind of goes on a journey to reach that destination of being on tilt, right? So let's just say it starts off by a big green day that turns red, and then you start to feel some sort of kind of hate towards the market, which you should never feel because the market is not someone that is against you. It's not someone that hates you. Um, but yes, you start to feel some sort of hate towards the market, and then you start to want to get some revenge on the market as if it's like your enemy, and you start fighting against it, and you start to double down, and then you start to get more aggressive, and then your stop gets hit, and you don't cut it, and now you're on tilt, and you go to a massive, massive red day, right? So going from A to B to C to D, all the way up into reaching the tilt, you've made a lot of decisions, right? Subconsciously, at least. You don't realize that you are making those decisions because you're being very emotional and you're not reflecting back on the actual trading day and what actually happened, right? When you start to sit down and you journal and you actually reflect, you'll be able to pinpoint all those kind of steps and all those places, mental places that you visited. That way you could block them whenever you start to feel some sort of way, right? So going back to the same example, I just say it goes from a big green day to a break even day. Now you have a decision to make. Are you gonna feel this hate towards the market because it took away your gains? Or are you gonna accept it that the outcome is just not in your favor today, but you stuck to your plan, you stuck to your system? You gotta make that decision right then and there, right? So when you journal, you get to actually see that mind kind of journey, and you get to block the steps that you don't want to take. All right, and remember, in trading and just in everything else in life, we're focused on getting better every single day, and that compounds over time. Right, so sticking to the process, sticking to the plan. These are systems that it's not just me that who has built them. I don't think that I'm some sort of creator and inventor. I'm not. I've just learned from greats that came before me, and I've used my experiences to put all this together. And I know that this stuff works because it has worked for me just as much as it has worked for other legends in the game. Of course, a lot more for them. Um, but yeah, so these processes do work. You just have to trust the process, give it time, and um, be hard on yourself, right? Show up every day, put in the work, do the boring work, right? The boring work is what's going to make a big impact, right? Be consistent with it, and then the results, the outcome, the money, the lavish lifestyle, all that stuff is going to follow in the future. Right now, we just focus on being consistent with the process, the actual day to day actions, our performance, and then the results will follow. That pretty much sums up today's presentation. You guys have any questions? Any comments? I would have to say, very easy. Start referring to yourself as a dumbass while journaling. Yeah, you gotta be harsh on yourself, definitely. Don't try to be like nice or whatever. No, just be harsh and get straight to the point. Let me end the recording here.